With that said, let's go ahead and move into the market update. You can see that we had this gap down that occurred back on the 11th. We came up, filled the gap, turned around and headed back down. We bounced back up today. One thing that I want to show you, however, though, is notice that the volume today was quite a bit less than the volume yesterday. We've talked about this before. The volume on up days is normally a little bit less than the volume on down days. We'll look at the 10-day moving average. Now, we did recover the 10-day moving average, so we have to pay attention to that. Also, remember that we do have one more zigzag pattern that could potentially be reached, which is up around the 426 area. And then that is the last extension level of the zigzag in the final leg of an already extended zigzag pattern that started way back at the start of the entire wave 5. I'd be surprised if we get there, but we might. So it bears watching. And the point that I want to make is the shorts are smart. I've talked about this before. In general terms, and please don't take offense to this, but short traders are viewed as being smarter than long traders. They're very smart, they're cunning, and they're patient. And they set up the longs. And so as you can see what's going on here, in my opinion, with this move here, then we had another move here, one there, and again, they're programming the buy the dips. They want to get the longs, the retail traders, into every time there's a drop down, that's a buying opportunity. And as soon as, think about it from a psychological standpoint, as soon as you get the retail traders fully dialed in, right? They're like, oh, it's a buying opportunity. The market's correct. It's a buying opportunity. As soon as that becomes prevalent, and there's a lot of commentary out about that on the whole Reddit thing. A lot of comments on buy the dips, buy the dips, buy the dips. They're all promoting that. That's what the shorts want. You're playing right into their hands when you do that. Now, again, I'm not suggesting that we are not going to go higher. There is that 426 area. What I am suggesting is, with all of our storm clouds, with all of our warnings, with all the things that are going on, the prudent thing to do right now is to be very cautious, not to get extended to the long side, and watch for a potential corrective move. Now, if you're asking me my opinion, I do think we're going to have a correction. Somewhere between 10 and 20% is my viewpoint. And I think it's going to come sooner rather than later. I'm not 100% convinced that we're going to hit this 426 level. If we get to there, we're just going to add more to the downside and wait for the correction that I believe is coming. And so let's take a look and see what the DMI is showing. Now, there was a little bit of a give back from the sellers today, a little bit of momentum from the buyers, the positive directional indicator and the negative directional indicator. But look what happened with the ADX. So remember, the trend has been to the upside, and the fact that we had a little bit of a blip up with the positive directional indicator, but the ADX actually went down, to me shows that there really wasn't a lot of strength to that move. It was on average volume, but it wasn't a really strong move, as evidenced by the DMI. So I still think that we need to be really cautious. We keep testing that 50-day moving average. And when I talk about the shorts, they test the water. They come in and they'll press their best to the downside, and then they see what happens. And I don't know what their measurement system is, but they have a measurement of how hard the longs come in, how quick they bail, and then they decide when they want to say, okay, we're going to push things lower. We had this gap down, and then we had another gap down yesterday. So we filled that today. I think that when we have these gaps, that as soon as you see that, it's like, okay, this is not it. And that's why you notice we have moved into a few puts, which we've talked about, and we'll have the opportunity to add to those if the market moves to the upside. But to me, the exciting thing is the fact that we are building up for, and we've been able to get out of some of those momentum positions that were dead. They were all dead. I mean, let's face it, we talked about it, and they've come back. One actually, ENBL made a profit, and the other two, we recovered almost everything from the loss. So this little stuff back and forth has given us an opportunity to clear off some of that stuff and regain some value there that looked like there wasn't going to be any. And now we have the opportunity to really load up and take advantage of a move to the downside. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.